Welcome to Subramani. One more important thing about being a good investor is to have an idea of the big picture as well as the small picture, right? So you see the strength of a group and see what is happening today and whether those same strengths can be used. For example, you can do all your analysis about Asian Paints and say it's a great company. True, it's a great company, but the big picture tells you that more and more people are buying houses which use lot more glass and steel and very little of brick, so there is going to be a fall in the demand for paints, right? So you need to understand the big picture and the small picture and see how it combines. For example, the Murugappa group, if you analyze the strength, it could get companies from institutions saying, oh, this company is not doing very well, would you like to handle it? Coromandel Fertilizer was given to them that way. They bought out the foreign partner, then they bought out some of the Indian partners, so that is how they got the company. But largely sale initiated by, I think, by IDBI or IFCI, I am not very sure, because they were not happy with the earlier management. But now such deals do not happen because there are vulture capitalists and venture capitalists both available who will pick up a sick company, go to the employees and say, do you want to do it? They will do a leverage buyout for the employees, give them sweat equity and say you run it without the promoter, right? So these kind of deals are today no longer happening with institutions. There are no institutions. IDBI is a bank, ICICI is a bank, IFCI does not really matter. So if Murugappa Group can't get these companies, I mean, when I'm saying I can't get these companies for a song, they will have to bid with everybody else and get it. Then the so-called margin vanishes, right? So if that strength of this group vanishes, then what happens to this group? Similarly, this group did enter, if I'm not wrong, they had Murugappa Electronics. They tried something in software but didn't work out. So just because it's a big group, it doesn't mean they will be successful. But it's very happy to note that this big group, when they enter a business and they see that they're not making enough profits or they don't have enough or does not make any sense, they get out of it. For example, they got out of the mutual fund business because the mutual fund business, the way they were doing it, was not profitable, and they're very clear that if they don't make enough cash profits, they will get out of that business. You know some of those things, but you have to be situationally aware that this was true of them in the 1980s and 90s, but in 2020 and 2030 you don't know whether there is some change in the family where a younger person has come and will for his own ego take a company to the dogs, right? It is possible. I'm not saying, I do not know. That's what I'm saying. I do not know whether there is an internal framework which is strong enough to say what can be done and what can't be done. I can only see as an outsider. I'm not an insider. I don't know anything about the company, right? So go by that. Even companies which are tracked well by the stock markets, they give you the signal pretty late, or you pick up the signal pretty late. It starts, I mean, there was a company in which I invested called Crest Animation. Mr. Vallabh Bansali of Inam joined the board. I was very happy, but when Mr. Vallabh Bansali left the board, I did not sell. Huge mistake. So I was waiting for some more signals. I must have bought it at 105, 110 also. I bought it at a lower price also, and it went, I think, up to 200. When Mr. Bansali left, it was, I think, 200 or something. I did not sell it then, but I sold it much later because I had a stop loss anyway. So around 130, 140, I must have got rid of everything. So did I lose money? Partially, maybe, because maybe I bought a little more. And also last 4,000-5,000 shares I sold at 70, 80 rupees. So there again I lost money because I said, let me, like I was building up like I was sizing up the position, I was sizing down the position, and I lost money because of simple mistakes like you get the signal but you still don't take it. You don't make so you have to have the big picture, seeing what is happening, understanding some of the signals, and then deciding whether to be invested in it or not be invested in it. So when you don't look at the big picture, you could lose money, but it does not mean that you look at the big picture and don't do the micro analysis. The micro analysis is also important to be a very good and able investor. You have to know to what you should pay attention and what you should not pay attention, right? Even in the Murugappa group, there was some murmur of a girl saying, I need more board presentation and all, but that story got killed. If you had panicked and sold, you would have lost money, right? So some of these things you have to understand. Also understand that investment markets stock exchanges, companies are a big group of complex parts, right? Company could be gaining market share and for which they could be throwing money, so the profitability could be hit. However, the profitability hit may not be so much because after 6 months, 8 months, 10 months after a COVID attack, and when some couple of competitors get killed, this company could become very, very profitable. So you have to understand what is moving those parts inside, what's happening. Is it able to attract talent? Is it not able to attract talent, right? All those questions arise, and all those questions have to be answered. You also understand that not all investment analysts or even CEOs or even promoters understand all the myriad things which are happening in the company, right? So you have to have a mental map, a cognitive map of all the important factors affecting that company. For example, I'm not very comfortable investing in a company in North India, but when I attended a press conference of Hero Honda held by senior Mr. Munjal, I was very impressed when he said certain things as to what is going to happen and all that. So somebody else asked in that press conference, does it mean only you will make money? And he was good enough to say, no, not only me, but also all the other players like Bajaj and I think Escorts, Yamaha, and in Suzuki, all these people will make money. These were the names originally for all these companies. They will all make money. So I came out of the press conference very confident that it is a good company, and I got the share, I think, at 30 rupees or 40 rupees, and I held on to the share till it reached some 2,500 or something like that. It was then called Hero Honda, or maybe even higher, I'm not sure. Stock split, bonus, whatever happened. Also, I got an original allotment of 500 shares or something, 50 shares or 500 shares, which my friend used to get a discount on the motorcycle that he bought. Everybody was happy, and I was very happy with that company because it was a joint venture, and I knew one thing, that if it's a joint venture, chances are the books will be clean, right? So you don't want one partner to go and tell the authorities, oh, this is what this fellow is doing and things like that. So I was very confident that even though this company was based in North India, and I had a lot of respect for Mr. Munjal, and so I had invested. Then when Honda went out of the joint venture, I started panicking and I started reducing my position. As expected, I had built up slowly, I had kept, and then I started selling off, and I said I will not be a shareholder of Hero Motors for too long. Honda is out, so let me sell. So I sold off, and recently you saw a news item where there was some GST problem or things like that. I do not know whether share price has fallen enough, but then again going back to I may have missed out some part of the upside, I don't know. But basically, when you have your rules clearly, like for example, I don't invest in companies based in one particular location or 2-3. There are many such locations. If a company is based out of that place, or if the promoter is from that place, I'm not comfortable with investing. It works for me, I don't know whether it works for you, but the question is, do those rules have to change? Do you have to look at more companies today? Will buy and hold not work at all? Will I have to be a momentum investor? These are questions which we have to keep asking ourselves regularly. I also know that very deep, complicated, unnecessarily complicated Excel tools and all may not work, but you don't need all this to perhaps do your analysis. Too much information does not lead to clarity of thought, but still keeping the big picture in mind, analyzing your own failures, keeping records, knowing why you're buying, and one very important thing, constantly comparing the performance of your portfolio to a few better portfolios. If you are sure that fund A, B and C are good portfolios, and you would like to copy some of what they do, or you compare yourself to the index and you find that well, those funds are performing better than you, then kill your ego and maybe invest in those mutual funds. There are many people who believe that they don't need mutual funds at all and they can handle their own investments. Not true. There is no way how I can participate in the newest company, no way how I can participate in say 30-40 pharma companies, and when I pick up 2-3 pharma funds, I realize how diversified their portfolios are and how different their portfolios are, and all of them are making money, right? So it is almost impossible to get such a big portfolio on your own account without overpaying for some of the stocks and not understanding which one to weed out, right? So you need a mutual fund also to do other, and for investing abroad, right? understanding each individual investment that you've made and tracking it. Like if I bought it in 1986 and I say, oh, I've got a fantastic CAGR, maybe I should have sold out in 2010 or maybe 2018, and because after 2018 to 2022 that company has not given me any return, or maybe given suboptimal return compared to the index. So should I not constantly look at what is happening, right? Situational awareness, knowing that, and understanding the continuously looking at the risk management of the company, risk management in your portfolio, right? So see what does not fit into you, see what you do not like. For example, I'm out of ITC for various reasons, but I'm quite happy that I'm out of ITC, right? So sometimes you can, sometimes you can't. Then the process of adjustment, the extrapolation of what can happen, what will happen, what should happen is not very easy, but we all have to keep doing it continuously so that we remove our confirmation bias and things like that. Otherwise we would get trapped in the biases which we understand. Not getting trapped into those biases should be at least one fallout of learning about biases. To the best of my knowledge, it's not easy, but all the best. Take care. Try doing it yourself. Thank you.